Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hello everyone, checking in on CMG, NKE, GoPro, and Twitter on an extremely bearish market day. And right off the bat, I want to say that CMG, I've been watching it trade every single day for over a year. And if there is a ticker that is good at contradicting the S&P 500 and not getting tied up with the computerized logarithmic trading that we see in act when we get this high volatility, CMG is the name that does its own thing more often than other names that I watch. PCLN often does as well, but in this instance, CMG, a very clear example. And it looked almost like a short squeeze today where we had pre-market action on very low volume. I saw about 6,000 shares traded, and that took the price up $7 from where we closed yesterday. We had bears all over CMG yesterday. We took a very key support level lost, and the bulls were at a must-hold level of 395.08. We dipped below it and just barely closed above it. So what happens? We get some bullish action in terms of fundamentals. Forget the company that gave that bullish sentiment on CMG this morning, but does not matter. What we have is the pre-market action on very, very low volume compared to the million shares traded today. 1.1 million shares traded, and I'm talking 6,000 to 10,000 shares, taking the price up $7. So we opened $7 higher, and suddenly the bears are saying, uh-oh, I need to cover because I'm in the hole. So we have shorts covering, bulls buying the dip, and that magnified to a very bullish day on some solid bull volume, and that is a big day for the bulls. So the resistance from here is 413. In order to break the lower high pattern, we have to break 413. Otherwise, it's just another lower high. I would not be surprised for the bulls to make an attempt up towards that level tomorrow, but we do have the middle Bollinger Band resistance, which is going to be in the 410s. So bulls in full control. Some nice, whoever orchestrated that pre-market action really set the day up well for the bulls, and it followed through. And the weekly time frame here is forming a bullish reversal candlestick, trying to keep this weekly middle Bollinger Band, which has held 5 back tests in a row if we can close this week above 403.96. So the bulls still have proving to do on the daily time frame, but the volume and the action today is a lot of strength, and we're going to see if this can be a catalyst off of this middle Bollinger Band weekly support to try and head back into the 434 very key resistance range. A long way to go still. NKE, bearish reaction to earnings. We're down at about 56 or lower currently. Key support down here, 56.02. We'll have to watch that level and see where we open pre-market tomorrow and right at the bell. If we break 56.02, we're looking at 55.69, and that's a key level. Otherwise, there's not a ton of support built in the $52 to $54 range because we exploded to the upside on the way up. So the bears are taking back over. Pretty much the absolute worst day that you could possibly have earnings come out. And nothing the bulls can do about that, but just bad luck. And we are going to set a lower high on the weekly time frame. 59.76, 59 even. That's a lower high, and now we're going to see a bearish reversal candlestick very likely form this week. So we need to be watching these key supports on the daily, lose those levels, and it's game over for the bulls in the short term. The bears are going to take back over on the weekly time frame. So the bulls were really set up nice, a bullish reaction. We would have broken the downtrend on the weekly time frame and shifted the trend back towards the bulls' favor. But obviously, can't anticipate the reaction to earnings, and it was a bearish reaction on a very bearish market day. Personally, I cannot imagine who would want to be buying on an earnings reaction in this current market with the weakness we saw at the end of the day and the close, anticipating further weakness tomorrow. GoPro, bearish in terms of seeing a lower high 873 and 870 and also breaking the higher lows of this bounce. So I'm looking at 827, 805, and then a lot of downside gap. If you don't want to trade where we currently stand, if you're not convinced the bears are back in control, you can wait for a break of 805 and make that bearish entry and count on a lack of support down here filling this gap to see some decent gains. So as of right now, it's a range of 873 and 805 with the bears having a bit of momentum due to the market weakness. But all in all, the bulls have to be pretty pleased that they didn't get back a ton of downside today, even though it was a pretty big bearish day. Weekly time frame, not confirming the bullish reversal candlestick of last week, still weak on the weekly, bears in full control, and we were scouting a bearish entry on this bounce once the bulls tired themselves out, and as of right now, we are seeing a bit of that tiring out action, and if we can see another lower low tomorrow by breaking 827, I'll be a lot more convinced that the bears are back in control. Twitter, we were looking for what happens if we're this weak when the market is extremely strong, what happens when we pull back? Well, when we dump, we see a dump. We're looking down at 1450 support. That was the next target. We hit it. We closed at the low. We lost the lower Bollinger Band. Look at this moving average, these exponential moving averages, a brick wall, and now lower lows. Weekly time frame is dumping. After 1450, we're looking down at 14 even and 1372. The bears are in absolute full control of Twitter, and there is no changing that in the short term. Lower highs and lower lows, the prevailing trend. And again, after 1450, 14 even, the low from mid-June in 2016, early June, is the level to be watching. So that's what we've got, an exciting trading day and certainly more volatility coming tomorrow. I appreciate you watching. Best of luck out there, and we'll see you tomorrow.